Welcome to today's market report.
European stock markets traded largely higher on Tuesday, helped by a batch of largely positive corporate earnings from a number of corporate giants. DAX in Germany traded largely flat. UK's FTSE 100 climbed 0.3%. CAC 40 in France rose 0.8%. The corporate earnings season remained in full flow in Europe Tuesday, with the banking sector leading the way. Societe Generale stock climbed 3% as the French lender, the country's third largest, raised its forecast for the full year after it swung back to profit in the second quarter. The results were held by a rebound in its French retail banking business. Standard Chartered stock rose 0.4% after the UK-based bank posted a better-than-expected 57% jump in its first half pre-tax profit, while also announcing a $250 million share buyback and resuming interim dividend payments. BP stock climbed 3.3% after the UK oil major followed its main rivals by increasing its dividend and boosting its share buybacks after higher crude prices allowed it to return to profit too. Stellantis stock rose 4.1% after the carmaker raised its full-year operating profit target after strong first-half results, while Safilo stock rose 0.3% after the French drug maker confirmed it had made a $3.2 billion offer to buy US biotech company Translate Bio to strengthen its capability in messenger RNA, the technology underlying the Moderna and Pfizer-BioNTech COVID-19 vaccines. BMW stock fell 3.3% after the German luxury car maker warned that the global semiconductor chip shortage and rising raw materials prices would hurt its second-half performance. Even with this caveats, the auto giant raised its profit forecast for 2021. In Asia, the stock of gaming and social media giant Tencent Holdings slumped it as much as 10% as investors fretted about Chinese authorities could now turn their regulatory focus on the gaming sector in wake of Beijing's recent clampdown on the education and the ride-hailing business. The main focus will be on the June Eurozone PPI release, with the annual figure expected to rise further from the 9.6% level seen in May. Oil prices edged higher on Tuesday, with the focus on the latest forecasts of US crude and product inventories for last week from the API. US crude futures traded 0.1% higher at $71.33 per barrel. Brent contract rose 0.1% to $72.93 per barrel. Gold futures fell 0.6% to $1,812.10 per ounce. On the FX front, the sterling pound was holding key levels against both the dollar and euro in the early morning UK trading session, with cable around the 139 handle and GBP/EUR trying to keep above 117. Brexit optimism and a fall in daily COVID cases in the UK helped to underpin sterling. From the UK's perspective, sterling gained a little after the fear of coronavirus embedded amid falling fresh COVID-19 infections. More than 72% of UK adults now have received 2 doses of the COVID vaccine so far. Meanwhile, the EU paused a legal action against the UK over the NI protocol over the previous week, which also added to the attractiveness of the British pound. Investors anticipate Thursday's Bank of England Monetary Policy Committee to assess the forward guidance on inflation and interest rates. The euro-dollar prices failed to chair better than forecast German retail sales for July and an upward revision to the Eurozone manufacturing PMI for the stated month the previous day. The US ISM manufacturing PMI, on the other hand, dropped below 60.9 market forecasts and 60.6 prior readouts to 59.5. It's worth noting that the latest activity numbers from China also disappointed markets and raised concerns over the global economic recovery from the pandemic. The dollar was on the back foot against the safe haven yen and the Swiss franc on Tuesday after softer US manufacturing data and rising concerns about coronavirus Delta variant promoted traders to win back bets on a strong economic recovery. The dollar slipped 0.15% to 109.16 yen, near its July 19th low of 109.07, which was its lowest level since late May. Against the Swiss franc, the dollar traded at 0.9054, having hit a 1.5-month low of 0.9038 in the previous session. The market is moderately risk-off, with bond yields falling off a bit since European trade yesterday.
This is today's market news. Thanks for listening. We'll see you next time.